Well, good morning, everyone. It's November 27th. It's Wednesday, and Thanksgiving is tomorrow, and I can't wait. It's going to be a fun time. I hope you guys are ready for the turkey. But remember, the biggest weight gain occurs during the holidays, so take it easy on the turkey, okay? All right, let's talk about the market. Now, as you can see here, volume is really low. Volume was about 37 million. The day before, it was 48 million. The day before that, it was 44 million. Average daily volume should be around 84, 90, 85 million. 80. The bottom line is volume is about half or even less than half of what it was in August. So volume is really low. Market can barely stay away from overbought territory. We got a muted session today. It's not going to be a full session anytime the week is cut off. So we have a muted session. Now, I want you to pay attention to the bond market, because today's new reports are going to impact the market, and this is what we're going to see. Now, it's 2 days above. Notice something. S&P 500 keeps making highs. What happens to the bond market? Is it going lower or is it going higher? It's going higher. Bonds and stocks should not be going higher at the same time. Also, again, percentage of stocks trading above the 200-day moving average, it has not increased since, over the last, hasn't increased in months. This is January. This is April. This is April. Look at this. We're at 71% above 200 moving average, 74. Let's see here. 75, 74.58. It doesn't look like we're seeing more upside in the S&P. And even when we do, what happens when we get up to about 82? We move down to the 50. That puts the S&P at the 200-day moving average when we go right here. I'm expecting this to come down right here. And it may take a little longer, but it's going to come down here. But notice something important. It's not going higher. The percentage of stocks in the S&P is not going higher. And the S&P continues moving higher. That's narrowing of momentum. Look at that. We can't stay away from overbought territory. Literally, even when we come down for a day or two, we come right back up. This is a market that's not stretched out like this. It's stretched out like this. It's so stretched out that the bond is trading above the 50-day moving average when the S&P is at all-time highs. I don't think that's ever happened. I mean, honestly, I've never seen that. That's not common. That's very, very uncommon. Stocks making new highs, bonds making new lows, or trading below the 200-day moving average. It's not common to see bonds rise and stocks rise at the same time. Bonds are inverse to the stock market, so you should be seeing a downside, not a gap up. Now, muted volume means slower trading action, but it means if surprises come, it can impact the trade more because you have low liquidity. So we have GDP. This is a big report. It's coming out probably before you get a chance to read this or watch this report. 1.9 is the estimate. If we come below 1.9, actually 2 if you want to know the truth, and remember, it'll be revised. Anything above 2 is bullish economy. Anything below 2 is a bearish economy. If the number is if the number is strongly above 2, you can expect the bond market to start moving south. If the number is below 2, if above 2, that means economy is strong. That means the bond market has no reason to go south. So that means interest rates can stay lower. And then remember, bonds and interest rates are inverse to each other. So positive GDP, no reason for bond yield to go lower. Bonds will go higher because then there's no reason for the Fed to lower rates. No reason for them to lower rates, so they naturally go up and bonds go down. So anything 2.1, 2.2, which I don't think will happen, you should see a cooling off on the bonds. But anything at 1.9, 1.8, 1.7, anything below 2, watch for a rally in the bond market. That's the first report. Second report, and they come out at the same time today. They're going to hit us hard. 218. This is above the consensus already twice. With the 4-week average is 221. It needs to be a little lower. Anything above 221 is telling us that unemployment is rising. It's still really, really, really low, but anything above 221, bonds rally. Anything below 221, like anything below 210, 205 will be very positive. Bonds will become subdued. Now, small caps. Small caps still remain above the breakout point. This is a really good breakout point, and they're staying here. Now, I like what I'm seeing so far. I'm not seeing a lot of volatility. I'm not seeing a lot of upside, but I don't believe we're there yet. Let me show you why. I want to read something to you. Investors have grown hopeful over trade negotiations as the world's two top economies keep their rhetoric in check. But I want to show you something interesting here. While most of the news on trade tension between China and Beijing points towards progress, the Department of Commerce on Tuesday announced a plan to begin requiring case-by-case approvals of all purchases by telecommunication companies of equipment that might pose a security risk. This is something totally different. So the move follows an order by Trump in May declaring a national emergency as a first step towards barring such deals. Major telecom gear suppliers like China's Huawei Technology and ZTE, those are big Chinese companies, would likely be the hardest hit. The Commerce Department proposal could complicate efforts to clinch the trade deal. Folks, not a lot of people are talking about this. And look at the commentary. This is great. The risk is optimistic. The risk is optimists are getting ahead of themselves on hopes of U.S.-China trade deal. I believe that. And not merely because the details of phase one deal may end up disappointment. That's true. That's what I'm saying too. But here's what you need to focus on. Instead, the bigger risk is an augmented form of bait and switch with regards to U.S.-China trade conflict, where investors are seduced by rapidly progressing phase one trade deal and blindsided by escalating tech tension between U.S. and China. again, this law that's coming into effect, this new case-by-case agreement, telecommunication company, this is ugly. So again, while we're potentially resolving one conflict here, we have another one that's starting right here. And I'm going to tell you a funny story. Not a funny story, actually, it's a sad story. It's a bait and switch story. I'm going to go back a long time. Do you guys you guys probably don't remember unless you lived in California, where gambling was allowed in terms of lottery tickets. And the reason it was cleared in California, this is a long time ago, this is about 30 years ago, and I'll never forget this. The basis was the money that was going to come from the lottery was going to be given to California schools, or part of it. And people loved the idea, and it was. And guess what happened afterwards? The money that was previously given to school before this allocation was taken off. It was a classic bait and switch. So the lottery system in California was approved on a complete bait and switch tactic. And I'm afraid we're seeing one right like it right here. So again, phase one, is it going to work out? I'm not 100% sure. I'm not even 50% sure. Either is the market. That's number one. Number two, there's a lot of other stuff going on between China and US, especially with the telecom giants. And one of the biggest economic derivatives in China is telecom. Huawei and ZTE, big companies. So there's a lot of tension going on between US and China. Don't get focused just on this trade war. Again, don't expect huge potential upside today. Keep your eye on the bond market. This is a warning sign. If the bond market is above the 50-day line, that's telling us that economy, that there's tension. It's telling me that there's tension, and keep your eye on the Russell. The fact is we're grossly overbought. We could just come off here side by side, just drift a little bit and then come higher. That would be ideal, or we can come back into the range, which will happen if there's no trade deal on the table. All right, you guys have a wonderful Thanksgiving, and I'll touch base with you on Friday. Talk soon. Bye.